And today we have the pleasure of having Christian Sealey and Dominic Henderson visiting us from Morrow Sodali. And I know that you're visiting Christian from Sydney. So
That's
thank
right.
you very much for your time today. And Dominic, I think, as I was saying earlier, you've probably been here as long as I have, but it's nice to have you in our office.
Good to see you.
So thank you very much for speaking with II Research in your busy schedule. I appreciate it on a Friday. This series is really moved from kind of a video to a podcast to bring interesting people in from the market and give us their views, especially on Japan, for our global client base, who, as you know, participate in our surveys of the sell-side analysts as well as executives. So I'd like to maybe start off with Christian, if you can tell us a little bit more about the firm and how the firm has got to where it is today.
Thanks, Michael. It's a pleasure to be here. So Morrow Sodali is one of the world's leading stakeholder engagement companies. Our origins date back more than 50 years in proxy solicitation in the US. And that, for those who aren't familiar with that term, that's the art of helping companies to reach out to their shareholders, ask a bunch of questions and bring the answers back so that the companies can form a more engaging dialogue with their shareholders. They can understand what their shareholders need from them. So our company is built on that premise, helping companies to understand who their shareholders are, firstly, understand what they're looking for, what are the policies that they're putting in place, what do they want to hear, what disclosures are they really seeking from the companies that they're holding, and then helping our clients to build meaningful and more constructive dialogue with those investors. And that could be institutional, could be high net worth, retail, etc. So that's the core of the business. As a natural extension of that, we've been building out a corporate governance advisory practice globally. And that is, again, to help our clients to have a better understanding of what are the corporate governance, desires and needs that their shareholders are looking for. How do they improve their disclosure with those shareholders? And a lot of the questions that we get from shareholders center around things like executive compensation, CEO pay, diversity. In more recent times, it shifted into ESG and sustainability and climate-related matters. So our practice very much focuses on those ESG topics and helping our clients to have a better understanding of what their shareholders are looking for. As an extension of that, we've been slowly building out our service offering to encompass a broader range of stakeholders, not just shareholders. As I said at the start, we're a stakeholder engagement business now. So a few years ago, TPG Capital acquired our company. And on the back, with their support, we've now been expanding our service offering to encompass the full suite of communications support. So financial communications, corporate communications, strategic communications, crisis and issues management, reputation management, importantly, investor relations, which ties really nicely with our traditional proxy business. And we have a large research, insights and data division. So we marry all of that together. And I think we're now quite a unique business where we're privately owned, PE backed, and we now have a very unique service offering that can help clients to really understand their stakeholders, but more importantly, to manage the needs and desires of those stakeholders and build really good relationships with them.
Okay, wonderful. And how long have you been in Japan specifically?
We opened the Japan office just over 2 years ago. Okay. Yeah. Knowing that it's in Japan things take time, slow build. You and I have been here a very long time, and we know that story. You just reminded me how long I've actually been here.
But even 2 years ago, did you feel that we would be where we are today as far as the market levels?
For 5 or 6 years, I've been talking to them blue in the face about the value in Japan. And a lot of people just dismiss it, saying it's cheap for a reason. And one of the real factors is that very few of the major investment institutions outside Japan actually have that much expertise anymore. And so, and China was the distraction. So a lot of money went into China. So more recently, money's been coming out of China, of course, finding a home in Japan. But I'd be interested if you have a view on this. But talking to my friends who visit Japan for these investor conferences, these are my old clients from my days on the sell side. I got the impression that, especially from the US, that there hasn't been that much really big allocation into Japan.
Yeah. I spoke with a client who's head of IR at one of the firms, and he said 20 years ago when he started out, there were 100 people investing in Japan globally, and he met all of them. And so over these 20 years, he's kept in touch with them, but of course, they're not the same people.
Yeah.
And I think that's one of the biggest challenges at the moment is what is it going to take to get the global allocators to actually allocate to Japan after the three missing decades, or the lost years, if you will.
But they've already missed a lot, because if you look at the, CLSA, who I know you know well, they've done some interesting work to show that actually profit growth in Japan in the last 10, 15 years has been very strong, rather stronger than you've seen in the US, for example. So, yeah, there's definitely been growth here. People focus too much on the lack of GDP growth.
Right.
That is an issue, but there was so much potential in Japanese companies, so much slack, that as they start to become more streamlined and pay more attention to the balance sheet and things like that, they're eking out some very, very good profit growth.
And I think I saw something where it shows that some of them, despite the fact that the market, went into the bottom around 7,000 and came back, there were still firms that had 5,000% returns. Yeah. So there's lots of winners, if you will.
Yeah.
So in institutional investor, the reality is we look at there's 3,500 listed companies. And of course, those top 200 get ranked very well in our rankings. But it's really that tail of the 3,000, plus companies that need to be global, whatever that is meaning. If that means having, an English integrated report or having an English website or making it more obvious what their business plan is. I think at the same time, when companies are seeing their shares unwinding, they're concerned about who might pick that up. So at least from our perspective, we're trying to let them see who's voting in their sector. And even if it's not in Japan specifically, globally, they can see who are the voters in the sector that they're in. So if they do want to be more global, they can then proactively reach out to investors in a good way rather than be surprised at who shows up.
And investors would like that. They want to have a rapport with their companies.
Exactly.
I mean, when an investor hears from the company they're invested in for the first time because there's a crisis or an activist attack or something, they're not really very happy about it.
True.
The company needs to have that rapport. They need to sort of have that relationship, and over time have explained to them the strategy. And that way you're going to keep them on side. I mean, there's a very good example of a company that told us a year or two ago that they actually, in the end, had a very, very good experience with one of these large engagement funds. The fund invested in the company, gave them hell for quite a long time, but I would say sort of quite proactive and positive measures that led the company to sell off an underperforming subsidiary, to refocus its business on what it's very good at. The earnings came through. As a result of that, the morale in the company was a lot better. And also as a result of that, the thing they were particularly pleased about is that because of the change in the company, they now have two very well-respected long-term institutional shareholders on their register. That's what companies they want. They want that kind of stability. You'd be amazed that the number of companies that don't quite get the fact that a serious investor is not really looking at next quarter's earnings.
And I think, it was always taboo in Japan to do hostile takeovers culturally, right? And that's changing. And I think, even in your most recent article that you talk about the new M&A era in Japan, et cetera. And you quote METI. But interestingly, I'm also curious, do you feel that METI has come to the plate on the back of news that Toshiba had brought to the forefront around how they were viewing people coming in to try to take it?
Well, sure. I mean, in the case of Toshiba, before we move forward, that was, there were so many things that could and should have been done differently. There was sort of a panic equity placement that got taken up by activists, and so Toshiba was really served up on a plate. They had a pretty tough time in that. But I think that the METI thing you referred to, this is the guideline, M&A guidelines, I actually think the driving factors are rather bigger than market. So Japan has got an issue. We have a rapidly aging population and a shrinking workforce. Now, when the bubble burst, when you and I were a bit younger, back in 1990, the government policy was to protect jobs at all costs. And we all know how difficult it is to restructure staff in Japan. Well, that's no longer a very relevant policy because there are terrible shortages now. There's even a monthly data release that shows the number of companies going bust because of labor shortages, and it's in the hundreds per month. Mm-hmm. So what's happening now is one of the observations of Japan has been there've always been too many makers of a certain product. I always say that in America, or probably America is the best example, you might have 3 or 4 companies making a certain product. In Japan, you've got 18 to 20. So they're competing like crazy against each other. And so no one's making any money. Margins are quite low. And their customers, the buyers of those products, they're very well aware of this. I mean, auto parts companies have a real tough time here because the big auto assemblers are playing these guys off against each other. So what's actually happening now, it's a combination of this labor thing, but also at the same time wanting to have sort of better returns for investors. And those investors primarily let's think retail and pensioners and things like that. So if you have a sub-industry with 18 companies and they're all having labor problems, well, what happens if we start consolidating those 18 down to 6 or 7 or 8? Mm. Most people are happy, and returns will improve.
So with regards to the shrinking population, I think that brings up an interesting kind of conundrum for companies. And so I heard you speak maybe a month or so ago about the NIDEC acquisition that they recently made. And I think the thing that stuck out the most to me was that maybe the managers didn't want to be acquired, but the employees do, because it takes the stress off of them, because the demand is obviously there, but there really isn't enough people to keep up with the demand per se.
I think so. I mean, NIDEC is actually a very good example. We're very well known to your subscribers because it's still run by the founder, Nagamori-san. Right. And very often, my career in Japanese equities goes back almost 40 years now. And one of the frustrations with investors has been that it's difficult to find the person who actually really runs the company, not the title, but who really runs it. Right. So they want to meet that person. Nagamori-san's always been that person, and he's very strong. So he's been consolidating the industry for several years, buying in Japan, but also overseas. He's the one who's got this wonderful line saying, making money in my industry is easy. And everything he buys, he seems to turn into profits. So the case we're referring to here, back in, I want to say in 2022, NIDEC made an approach to a smaller machine tool company called Takizawa, and to maybe to do something to work together somehow, but they were rebuffed. And so after a while, NIDEC just turned around and launched an unsolicited bid for the company. Successful. And what Nagamori-san, the president of NIDEC, said later, he said, not many people were unhappy with this deal. I think the customers are happy, the staff are happy, the people who probably weren't happy were the senior managers of the company. And, that's probably true, but you have to put that into context as well. And this comes on to one of the things Christian mentioned earlier. He was talking about executive compensation and things. Typically speaking in Japan, typically, not every case, of course, there's very little, if any, equity compensation. So people don't have skin in the game. There are too many companies where the president owns 0.01%. Right. Whereas, and the reason I said I have some sympathy for these people is that there's a very good chance that they're out of a job age 58. And that is, your job prospects are not great in Japan at that stage. And so, there has been resistance. And one of the things that the METI rules does is it basically indicates to companies that they have to have a fair and transparent process. And part of that is actually paying attention to an approach from outside, take it to the board to discuss it. There have been cases in history where it never gets to the board. Someone just dismisses it, saying, no, we don't want that. So that's one of these changes. Yeah.
Okay. So, Christian, you're the international CEO. So when you look across the globe and then you look at Japan, what do you feel is you would love to see happen, or what do you feel is completely different than where the rest of the world is as far as maybe governance or diversity or whatever the case may be?
Yeah.
Like, why Japan? Why would you want to have an office here? What is your view from that perspective?
Great question, and we're incredibly excited by Japan and what we're seeing here. We've been, as Dominic mentioned, in the market for a couple of years. We've been actively looking at the market and studying the market for more than a decade. There's a lot of things here that are interesting. Just the concept of the inverse relationship around shareholder primacy. So you look at the US, for example, shareholders are the top dog. Companies have been really focused on managing that shareholder base very closely for years. Here, it's the other way around. It's staff. It's companies being super focused on the sustainability of the business, making sure that the company will exist well into the future, and as a consequence, and they've been really focused on their people. So I think what we're seeing now is a little bit of a balancing. Certainly in the US, we're starting to see a more broader group of stakeholders come to the forefront, and companies are really listening to some of the smaller minority voices, not just the large institutional shareholders. And similarly here, Japanese companies are starting to pay attention to their shareholders and realizing that there's value for them in listening to some of the feedback. So it's a nice moment. I don't think we're going to see a complete shift to the US model. I think we're going to see a nice, calibration of approach, and certainly from the clients that we talk to here in this market, as well as a lot of the advisors, there's a very rapid shift taking place at the moment. Dominic touched on labour shortages earlier, but there's an unbundling of Japanese companies starting to take place. There is a greater desire to be engaging with those shareholders and stakeholders, in a more meaningful way. Sustainability, it's a global trend, and it's not going away. But society is demanding greater access, greater disclosure, greater levels of information, so they can understand what companies are doing to make sure that the world will be a safer and better place into the future. And I think companies are really taking that to heart and thinking deeply about, okay, how do we improve our communication with our core stakeholders? And in Japan, there's a lot of really good things happening. There's regulatory change, there's pressure coming from the exchange, there's pressure coming from outside shareholders. It's a market that has been, a market for activism, and that's increasing. There's a lot more shareholder interest and involvement. We're seeing that in the annual meetings. So for us as a firm that helps companies to have those discussions, to have a more meaningful relationship and an open dialogue with its stakeholders, this is an incredibly exciting market for us. I do think companies are not all well equipped yet to have those conversations. And I don't think traditional board and governance structures exist to the level that they exist in many other markets globally. So that's exciting for us too. Having an opportunity to help Japanese corporates to evolve their structures, to really look inwards, to start to examine how they can have a more meaningful dialogue. That's what we do, and that's what we're excited about.
I mean, there's the expression, every journey starts with one step. And I think, I've obviously been bullish to stay here in Japan all this time, and I never really dreamed we would be where we're at right now, but I do feel it's kind of the starting line. What do you think is that kind of special sauce for people who are maybe new to the market or making those decisions on allocating to Japan?
I think, fundamentally, Japan still has an awful lot of cheap companies. I think the catalyst this time, whereas people outside Japan, including engagement and activist investors and people like you and I who look at companies, have seen the potential and frankly have had plenty of frustration as well. Very often Japan has been resistant to outside pressure, but when the pressure is coming from inside, meaning in this case, we talk about the METI M&A regulations, but I think the real key point here has been the letter that the then new CEO of JPX, which is the Tokyo Stock Exchange, sent to every listed company in March of 2023, And although the TSE doesn't have any particular enforcement power, it's certainly got naming and shaming power. And very simply, they said, listen, we need companies to display a management style which shows that it's conscious of it understands its cost of capital and is aware of the share price. And that they should disclose plans or a strategy to improve these returns, improve the valuation, and it just doesn't just apply to companies that are trading below book value. Because by definition, if you're trading below book value, the market is telling you that you're actually destroying value because your returns are lower than your cost of capital.
Right.
So you've got to understand your cost of capital to improve things. So please lay that out. Now, it's had a very dramatic impact on share prices, but again, I refer to CLSA, who we listened to their fine strategist, Nicholas Smith, the other day talking, and he was saying that still to this day, 50% of prime listed companies and 79% of companies listed on the standard market have not actually disclosed these improvement plans. So there's still a very, very long way to go. Now, on top of that, we're very happy that recently we announced a business alliance with SMBC Nikko Securities. And so one of the reasons we did this, or they wanted to do this, is that they understand, and their clients, and we're talking about very, very large Japanese companies, they understand this pressure is not going away. They understand that they need, it's in their interest to have sort of better dialogue with their investors or potential investors, shareholders and potential investors. And so this comes back to disclosure, comes back to communications. I mean, at the beginning of our conversation, when Christian explained what Morrow Sodali does, this theme of communication comes through very strongly. And so understanding that's what's required. At a more basic level, identifying who your actual shareholders are, which can be quite difficult in Japan because it's what's called a non-disclosed market. Right. Quite a few of them are hidden behind the name of the custodian. And by the way, that might well change. There are changes in the works there to make it what's called a fully disclosed market. And that will take a few years. So I think it's really, and I give all credit to the CEO of JPX, Yamaji-san, for doing this. I mean, behind the scenes, there's been a lot of push for changes, a lot of corporate governance, and I'm sure you're familiar with our mutual friend Nicholas Bennett of VEDTI. He's been pushing this corporate governance thing very hard for a very long time, and to his credit, he's very resilient.
Yes, he is. In a good way. I hate to bring this up as a reference, but 3/11, the Fukushima tsunami, or that tsunami. The only reason I bring it up is I think it really underlined the reality that Japan can't rely on the domestic economy. And I think, even though that might be a silly reference to make, I think bringing it back to today, when you see 50% of these companies haven't given their plans, and at the same time, some of them are trying to become delisted, to me it's counterintuitive that people were trying to shrink away from the exchange or even the market's pressure for them to be coming to the plate, so to speak. And I think that is a true reality. They do have to be more global, and they do have to seek that in order to get the growth that's kind of built into what they're able to do. And so when you see some people shrinking away from the call to action, and then you see the other ones that are coming to the plate, there's a lot going on, I think, with companies that are doing too little too late.
I know what you're saying. I might take a slightly different view. I'd say that the animal spirits are starting to flow. People see the opportunity to take something private, so long as it's done fairly and transparently. There have been cases where the attempted take-unders, where frankly, some institutional investors have stepped in to block it, and that's good. But just going back to Fukushima, I think it raises an interesting point. Japan is a very proud country, and it needs to, it can't be dictated from. I'm thinking here about things like ESG and sustainability. What is important, or what are the main factors for a company that's maybe listed in Germany may not be the most important things for Japan. I mean, Germany doesn't have earthquakes.
Right.
But as a serious investor, who's going to make a big commitment to Japan, you want to understand what the company's backup plan is in case there is an earthquake. Because, do you remember several companies' facilities were put out of action for quite a long time?
Yes.
Yeah. So Japan needs its own version of what's happening elsewhere. But no, I think I'll just go back to the animal spirits, though. I think that's really important because, again, if you're outside Japan, maybe you don't see this, but some of the younger Japanese think in a very different way to the older crowd. Very different.
I mean, the expression "seeing is believing" can also be "believing is seeing." So once people start believing that there is possibility, and because I think the last 3 decades, it's just been kind of like this deflation of the spirit, if you will, of Japanese not realizing how innovative they are and not probably executing on so many different products and ideas and things that they do. In reality, that's really what they should be exporting out to the global market, whether it be infrastructure or products or the like. And so when we speak to like trading companies, for example, I think those are probably the most difficult business plans to understand, but at the same time, probably the truest global companies.
The biggest private equity companies in the world.
Yes. Yes. ESG, I don't know if you want to talk about ESG.
No, I'm happy to.
I mean, I'll be frank with you. Years ago, I was in client strategy at one of the firms, and I would go in for my review, and they said, you got 0 in ESG. And at that time, I said, why 0, but what's ESG? So I did interview, the big investors, and they said it's really ESG, with being, larger in size. In Japan, do you really feel people are taking it seriously? Because there's a debate where some people feel like they're pivoting away from ESG, if that's even possible. I mean, I'm curious to know, Christian, your opinion.
No, look, ESG is a big pillar of our business globally. So when we think about it, we really do focus on the G, and I think that then leads you to E and S, environmental and social considerations. But without a really strong governance framework, it's very difficult to start to think about how a company can manage their E and the S. For us, I think it can be brought back to what is good business practice. How do you run a successful business? And I don't think that's a new concept. I think the idea of really analysing the business, understanding what is a successful governance framework, how do we ensure that the right people have access to the right levers of control to make the right decisions at the right times. That is governance. It's how do we make sure that we're incentivizing or putting the right measures in place to incentivize business leaders to make those right decisions. So that does lead you to issues like executive compensation. It does lead you to issues like diversity on the board. And that's not just gender. It's diversity of thought, diversity of skill, diversity of race, of gender, of a whole lot of things. Age, exactly. So I think a really good ESG framework does start with governance. And a company that can set itself up for success with really strong governance frameworks that then flow into a whole lot of non-financial risks and opportunities, that's a company to keep an eye on for investment. So we're big believers in it. As I said, it's one of the pillars of our company. We think it ties beautifully with the whole concept of shareholder engagement and stakeholder engagement. And we do think that really well-run companies tend to have a very good grasp on their environmental, social, and governance considerations.
With regards to ESG, and generally, I think it can be argued that if a company is rated well in ESG, they also have a pretty good control on their risks. And so going back to your point on when people are looking at Japan versus a Germany and the inherent risks that there are in Japan, is this one of the reasons companies should be putting forward how well they rate in ESG, et cetera?
Yeah, I mean, I agree with everything Christian said. To try and make it a little clearer, I prefer the terms governance and sustainability to ESG. That's me personally.
Right.
Because to me, governance is a structural thing, and the E and S are strategic things. So as Christian said, unless you've got your governance sorted out, it's going to be difficult to work on the E and the S. In terms of Japan, actually, Japan has always been pretty focused, culturally, on the the E side of things. I mean, the first place I ever saw recycling bins for paper was in Japan.
Sure.
People recycle their bottles and things without even thinking about it. So I think it's quite ingrained here. On the risk, Now this is important, and this comes under governance, and this is definitely something that serious investors look at. It's are companies assessing their risk? Now, one of the criticisms of Japan, I think, is a fair one over the decades, is this wanting to avoid risk. I mean, people who are younger than you and I, Michael, don't probably quite understand how bruising the bubble bursting in Japan was. It was really, really tough, and that's one of the reasons why. So a lot of people in Japan now, in their 40s or early 50s, they remember watching their parents suffer. Taking a mortgage out in 1987, paying top dollar for a little apartment, and then watching it go down in value by 80%.
Yeah.
And so that's why so many people were not, are not doing the stock market.
Yeah.
But by the way, as soon as Japan got a sniff of inflation, the cash-rich people moved their money really fast. So real estate prices in central Tokyo, apartments went up fast. It wasn't just overseas money. That was very wealthy Japanese people. Anyway, so on the risk side of things, I think one of the criticisms has been sort of some risk aversion. I'd like to explain what serious investors are looking for. They want to see companies taking risk, because that's how you're going to achieve growth. They want to see companies investing in growth.
Sure.
So long as they're understanding the risk and they're monitoring the risk. So, and if at this point I could take you to some of the very, very biggest investors in the world, the passive investors, the Vanguards, the BlackRocks, the State Streets. It's fair to say the understanding of these investors in Japan is probably not that high. A lot of people think they can just, they're passive. Ignore them. Absolutely not. These people, these firms, one of the things that they look at very, very closely is risk. Is this company? How is this company identifying and managing its risk? So when Vanguard wants to engage with a company, that's often the question they're asking. And by the way, they want to ask that question ideally to a non-executive director, which in itself in Japan is a relatively new thing.
Yes.
And certainly freaks a few people out.
And all the more reason to have that diversity on your boards to be able to speak from different angles. I was also listening to Nick's speech at Sealey, and with regards to diversity on the board, I agree. It's not just having women on the board, but more importantly, women in positions of power. And at the same time, not just that, also looking at what is the average age of the board. And in many cases, interestingly, in my perspective, from the data that I see, some companies are doing it very well. And it's not just a box checking exercise, but unfortunately, I think there's a lot that are. And so what do you feel is the best way to get those companies to kind of wake up, and it's not just checking boxes? Because I think naturally the next question is going to be, is the board really driving the strategy around ESG, for example, or is the board really driving many things? And I always feel, where's the board? I felt that on Lehman Brothers. Yeah. I felt that in many cases, where's the board? And I think, before we go to you, Christian, I think if you see in Europe, some board members are financially being penalized if they're not coming to the plate on what their responsibilities are. So how do you see this?
Yeah, look, I think it's well proven that a diverse board, can create greater value. And I think, on the topic of gender and gender diversity, setting targets for female directors is a good thing. We're supportive of it. The challenge we've got here in this market is the pool. The pool is small. You mentioned at the start of this discussion, there's more than 3,500 companies here. The pool of senior executive women just isn't big enough to service that market at this point. So we need generational change. We need to create career paths for women in Japan that enables them to reach higher levels, of executive management. We also need to think really carefully about how we help them with family planning so that they can leave the workforce for a period of time, have the family, and then re-enter the workforce and continue their executive careers. So breaking through that glass ceiling and creating those opportunities for senior female executives, that's the first step. That will then enable us to have a bigger pool to draw upon to then, encourage those female leaders to enter boardrooms and to provide that diversity of thought. The other piece here is also making sure that there's diversity of skill set. We want to see, directors on boards who have the requisite skills to see that company through, good times and bad times. We want to know that the board is adequately, comprised. So again, when we're looking to increase the number of women on boards, we also need to make sure that, that those female executives have had experience in a broader variety of roles, not the your classic accounting and tax and legal type roles, but more in the business, in a real managerial role. So I think this is happening. There's a desire for it to happen, but change takes time. But look, we're very keen to see, and globally we've been, this is nothing new. We've been working with companies in 44 countries. So we see this a lot, but there's no doubt in my mind that companies that have a well-run board that has good diversity creates greater value for shareholders.
And boards need to have the ability to look at themselves, and so board evaluation is an important thing. In general, boards are expected to do a very deep evaluation every maybe 4 or 5 years. They should do a more simple, even internal evaluation every year. That's one of the things we do. We can actually supply sort of an online platform for companies to do their own internal evaluations. And it's quite interesting because you'll find that actually often you'll find answers like, why is this person on the board? Or how many of the board members do you think should be replaced? And, the answer is not usually 0. So, I think the board does play a very important role, increasingly important role. And I think non-executive directors they need to be, don't forget, they're put there by shareholders, and they need to speak out. It's hopefully sometimes there is heated debate in a boardroom about strategy, not rubber stamping what the CEO has brought into that meeting. I came across a very interesting comment from a friend of mine who's one of the smartest people I know, and she said to me, on one of the boards, she said, I think we've got a fantastic board. The problem we have is the board is moving too fast for the company management to keep up with.
Right.
Which I thought was really kind of interesting, and looking at it, maybe not that surprising. Middle managers are like freaking out.
And I think, when it comes to AI or it comes to any kind of like things that are quite topical, everything's moving faster than the companies can keep up with policy-wise. Self-driving cars. And this is my personal opinion. I always feel when it comes to like women on boards or more diversity and work-life balance, etc., people are looking too much at the government. There's a lot of cash-rich companies that could build daycare centers, and they could make it easier for people to drop off their kids as they're heading into the office, etc. One last question, and I asked it the other day, and I'm just curious with regards to your opinion on the yen. And I don't know if that's something that you like talking about. But personally, I'm surprised it's not 200. And I'm also, I see it continuing to go in a direction where nobody's really doing anything about it. And it seems like they're waiting to see what the salary increases are going to be doing to earnings before they make any kind of call or any concerted efforts on intervention if they can.
I have no predictive power, of course. The only thing I would point out is in real terms, the yen is as cheap as it's been since 1969. Doesn't mean it. I mean, I was going to say, it doesn't mean it can't overshoot. Maybe it is overshooting already. I don't know. Interest rates are not going up significantly in Japan for a very, very long time. I believe today people were hoping, but it didn't happen, that the BOJ would raise rates very slightly, but it would be very slight. And U.S. rate, the gap between Japan and U.S. rates is still very significant. I don't have a very strong view, but I think over any period, other than the very short term, betting against the yen, I wouldn't do it.
Exactly.
Yeah, I wouldn't do it, to be honest. But I mean, you touched on something earlier in your question just there about salaries and things. That's something that I wish I would change in Japan. I wish people would get decent pay rises. This might be a sort of a way to end the podcast, but Japan, the standard of living in Japan has basically probably gone down. Certainly purchasing power has gone down.
Right.
If you look at real prices, they've gone up quite a lot and salaries have not.
Mm.
I think it's fair to say it's the only country in the world where this has happened and there has not been a revolution.
Well, I mean, there was a CEO, which will remain unnamed, who said he's raising salaries 40%, and even that's not enough. And my response is, well, keep raising them.
Yeah.
Because you know that it's not enough, and you've known that for a long time, so keep raising them.
And there's so much, you could call it excess cash on a balance sheet, or there's so much slack in the system.
Mm.
You could raise rates.
Right.
And just going back to what we talked about earlier about consolidation, well, maybe if a company can't afford to raise its rates, maybe it's time for that company to get taken over.
Mm.
And so it's a complete reorganization of Japan,
Right.
and making it much more streamlined and more efficient.
Exactly. Well, thank you for your time today, and
Thank
I
you.
can very, very much see clearly how your firm can be extremely useful in the market. I think culturally, everyone tends to believe what they're told from the outside. If people come in from the outside with this expertise, I can clearly see how you have a lot of potential ahead of you, as well as what you're already enjoying. So I really appreciate your time today. I know you're very busy, and thank you for your time.
Thank you.
Thank you, Michael. It's been a pleasure.
Absolutely.